Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we're going to be going over 5 penny stocks that are good right now, undervalued, double your money, triple your money, make a bajillion dollars off these penny stocks. We are going to be talking about those today, as well as giving you guys an update on the YouTube portfolio. So we add about $100 to this portfolio every week. I skipped a week last week, but we're back strong this week, and I'm going to be making a $100 purchase for public.com. If you guys do want to check out public.com, the link is going to be in the description or in the pinned comment section. You get up to $50 in free stock for signing up, so it's pretty much free money. All you have to do is sign up, link your bank account, and you get up to $50 in free stocks. So definitely check that out. We're going to be talking about it more later in the video, so make sure you guys leave that early thumbs up on the video if you guys have not already. It's the #1 thing you can do to help me out. And yeah, without further ado, let's get into the top 5 penny stocks to buy now. Alright, so the first penny stock that we have on this list is Sundial Growers. Guys, Sundial, as you can see here, it is trading at $1.31, and its ticker symbol is SNDL. This stock is a little bit of a meme stock. It's a big stock in the Reddit community, and it has been on an absolute tear, being up 16% on the day. So unless you guys live under a rock, you guys know that AMC has been shooting up to the absolute moon, while GameStop has also been shooting up as well. This is because a lot of short squeezes are happening right now, and Sundial Growers is no exception. Sundial Growers has a decent amount of short interest. It was around 16% last time it got updated. I'm sure now that it has jumped up, there is much higher short interest than that, probably 30 to 40% on this stock. So this one is not one to be slept on if you're trying to play a short squeeze. Sundial Growers will follow the cannabis market, but it will also follow the meme stock market. So it has 2 different catalysts that could help its share price if those sectors are rallying. And currently meme stocks such as AMC and GameStop are rallying, so Sundial Growers with a high short float is absolutely no exception to this rule. So I had to list it as the #1 stock to buy now. Now that being said, I do think Sundial is fundamentally overvalued. So this one is one that you would only be in for a month at most, maybe 2 months. And you're just going to be day trading it or swing trading it. I would not really recommend holding Sundial for too long, because I do think this one is fundamentally overvalued and there are better deals in the weed stock market. The next stock that we have on this list is Atossa Genetics. Guys, I talked about this in my last penny stock video, and I told you guys this one is my highest conviction penny stock. The hedge fund Renaissance picked up about a 600% increase in shares in Atossa Genetics, and this stock has gone crazy ever since. I told you guys to buy it around the $3.20 range, and now you can see it is at $4.34. So that is a very large jump on your money, and I think this one might have some more room to run, so I had to include it on the list. Atossa Genetics does have some promising breast cancer treatment, but the reason that I do have it on his list is because of its potential for gains. Just the combined fact that it is a popular stock right now. Renaissance picked up another 600% of shares on this stock, and it is a low market cap penny stock. I just think this one can definitely make you some money. Again, penny stocks in general, I would not really recommend holding it for the long term. There's a lot of risk involved in penny stocks. However, because of their low market caps, they have the potential to 100x, 200x, 300x your money. So with that being said, you can't really sleep on these penny stocks, especially Atossa. The next stock that we have on this list is Naked, NAKD. Guys, Naked is another one with a high short float that has been running on this short squeeze hype. I do think a stock like Naked does have a bit more potential than a stock like AMC or GME because of its low market cap. You can see that warning saying that it has a low market cap. So with that being said, I do think that this one does have a lot of room to run, especially if it does climb the ranks of the meme stocks that are currently in a short squeeze. Now, we can zoom out here to the 1 week chart. You can see that it's up 51% in the past week. So there is definitely risk involved when buying this. You can definitely lose money while buying this. So don't take my word for it. I'm not a financial advisor. I'm just saying that there is a short squeeze involved with this stock. So you can see that as an opportunity, although there is always some risk. The next stock that we have on this list is Ideanomics. Now, this one does not have the same low market cap symbol there on the screen. So even though this stock is a penny stock, it doesn't give you that same low market cap, even though Atos had a higher share price. And this is because just because a stock is a penny stock, it relies on not only the share price, but the amount of shares outstanding to determine the market cap. So if this one has more shares outstanding than a stock like Atos, it'll have a higher market cap, just because once you multiply those two variables, you'll get a higher number. So this one has over $1 billion in market cap, which means it's less likely to have as huge of swings as some of the other ones. However, that being said, Ideanomics is a great company. They recently had some news where one of their subsidiaries, Wave, installed their wireless charging system for electric buses, which is very, very cool and innovative. Wireless charging for electric vehicles. I can only see this market expanding in the future. That being said, there's lots of risk involved in this new innovative market, and not every EV company is going to be successful. Even if their product is completely innovative, some other company can always jump in and make it better than them. So you have to keep in mind those risks when investing in a stock like Ideanomics. We also have to look at the year chart. It's up 678% in the past year. So you are buying this at a high. However, it's not at its all-time high, which is in February. You can see it hit $5.43. So you are getting it at a discount compared to that. However, when you look at the grand scheme of things, obviously it is up big time in the past year. Now, that being said, this one does have about a 10% short float. So if this one does run, I'm sure the short interest will go up and there will be more of a short squeeze. However, this one is not really one that you want to invest in if you are looking for a short squeeze, because its short interest is just a lot lower than a stock like Sundial or a stock like AMC. So with that being said, if you really do want to invest in Ideanomics, you want to look more into it, research the company, and figure out whether or not this is one you want to be invested in for the long term. The next penny stock that we have on this list is a Wildcard. So this one is an over-the-counter penny stock, and it is called GMER, or Good Gaming Incorporated. So Good Gaming Incorporated is a gaming company currently, and they are incorporating cryptocurrencies and virtual reality into their gaming products. They currently host a variety of esports tournaments, run a couple of Minecraft servers, and they are releasing an NFT-based cryptocurrency game called MicroBuddies. In this game, you can collect NFTs that can be converted directly into Ethereum. This game is very, very similar to CryptoKitties, and CryptoKitties generated $30 million in revenue last year, which is 3 times the current market cap of this penny stock. So that would be a huge upside if MicroBuddies does take off the way that they have planned. Now, that being said, you can see that this market cap is currently $9 million. So it is an extremely low market cap. So with that being said, this stock is very risky. And the other risk I wanted to show you guys. So just a week ago, it was trading at 6 cents. Then it went back down to 4 cents, 5 cents. And now it's currently around 13 cents, as you can see, and it's jumped up a lot. So with that being said, you might not want to buy it now. I say maybe wait for a little minor sell-off. Try to get it in the 6 cents to 9 cents range if you guys do believe in this stock long term. And with that being said, this stock can be a very, very risky play. Anything that has a $9 million market cap, especially when we are flooded with stocks with over $1 billion in market cap, you'd see something like 9 million. It's just so different than what you are used to in investing. So definitely do your due diligence. They have a website, Good wildcard-gaming.com. So definitely check that out before investing in this stock. They're not as professional as some other gaming companies, so this one is definitely a wild card. However, people do seem to like what they are doing with gaming. Alright, so with all that being said, we are going to take a look at the YouTube public.com portfolio. So as you can see here, this is the app that we've been using the entire video. It's public.com. I am an affiliate for public.com, so you can help out and support the channel by using the link below to sign up for Public. That link is going to be in the description, but also the pinned comment in the comment section, so you can check that out down below. You get up to $50 in free stock just for signing up, so you get free money and it helps support this channel, so it is a win-win. So I really enjoy what public.com is doing. They are really for the customer. They don't do any payment for order flow. They don't do any of those shady business practices that Robinhood does, and they rely off of your tips alone to function. So satisfying the consumer is the goal from Public, so you know that they are going to do a good job because their livelihood depends on the consumer's experience. So that's how you know this is going to be a good one. However, it's awesome. It's also a social media, so you can literally click on this guy, see what his portfolio is, see what he has in his long term, see what he's trading. He has Enphase Energy, that's a cool one. Beyond Meat, that's a cool one as well. Graham Stephan is on Public as well, who's another YouTuber, and you can see what he's buying. He's got Apple, Amazon, Boeing, Beyond Meat, Cheesecake Factory, Coinbase, Corsair, Disney. He's got it all. Oh, he has Neo as well, Palantir. So anyways, we are going to have to add $100 to the YouTube portfolio, but I want to take a quick look at our performance so far, and let's just say it's not the prettiest. So we can take a look right here. We're going to scroll out to the 6-month chart to basically just see exactly what we've done since the beginning. So we are down $2.53 overall on this YouTube portfolio. So I'm pretty mad at you guys. You guys haven't been picking me the best stocks. No, I'm just joking. I would never be mad at you guys, and we are having a consistent investing strategy, which is the most important thing that we can be doing. So $100 a week is a great way to invest. It's called dollar cost averaging. You typically do it with one single stock. You'll put in like $100 a week to that stock and gain the average price. However, it is also a solid strategy to keep adding $100 to maybe an index fund or any single stock that you like. So this week, Palantir won. As you can see here from the poll that we took, 43% of people voted for Palantir stock. So we are going to be adding $100 to Palantir. So we're going to move back real quick. And yeah, so I have Palantir currently in my long term, and that poll that I took was all stocks that I already own. So I wanted to add to a stock that I already own. So what we're going to do is we're going to click this money sign in the bottom right corner. We're going to click 100, click continue, and boom, $100 of instant cash unlocked. We're going to click on Palantir. We're going to click trade. We're going to click invest. We're going to click 100. We're going to click invest, and we're going to click confirm. And boom, $100 invested in Palantir Technologies YouTube portfolio. Woo! Post that. So I just posted that to my feed, and I just wanted to take a look here at the notification section because a bunch of you guys have been following me on Public. So I'll do this next week as well. I'll show you guys who exactly is following me on Public, just so you guys can see your names pop up on Public as well, so you get a little shout out in my video if you guys do follow me on Public. It is also just fun. Like, you can see what I'm adding, you can see what I'm posting about, and all that. So make sure you guys follow me once you guys sign up for Public using that link below. And another thing right here is they are explaining what they are doing. So it says optional tipping, tips support or move away from payment for order flow. So they are seriously just relying on tips to function, which is why I think Public definitely has the edge over Robinhood. They're here to satisfy the customer. They're not here to extract from you and to sell you and to do all those shady things that Robinhood does. So definitely check out Public if you haven't already. If you're using Robinhood right now and you want to invest for the long term and you don't want to be manipulated by the market maker, Public is the way to go, so definitely check that out. That's all I got for the video for you guys today. I hope you guys enjoyed. I hope you guys learned something. Those 5 penny stock plays are definitely some of the riskier plays that I talk about on this channel. And full disclosure, I am not currently buying into any of those penny stock plays because personally, I just don't have the appetite for the risk involved with them. I don't really like to play on these short squeezes. I like to review fundamentals of a stock to make sure that they are set to make ample amounts of cash for me as a shareholder, and I'm willing to pay a premium on a stock. I'm willing to buy a 5 billion market cap stock if I know that they are going to be successful in the future and they are going to expand in their business. So these penny stock ones are a lot more risky, especially the ones that I talked about for a short squeeze. Obviously they have other components to their business as well. However, I do think stock like Sundial is a bit overvalued at the current valuation based off of its fundamentals, and it is seriously playing off of short squeeze and meme hype. So if you disagree with me, feel free to leave a comment. I'll probably respond to you and we can have a conversation in the comment section. So I'm always willing to talk to you guys in the comments, so definitely leave a comment down below. Subscribe to the channel if you guys want to see more videos like this. We try to post almost every single day on this channel, and like the video because liking the video is the #1 thing you can do to help out a small content creator like myself. So with that being said, that's about it for the video for you guys today. I hope you guys enjoyed, and peace.